I was reading the other day, millennials willing to find more information online than going to the school, and I agree. And the idea is to gather data. So what you can do to gather data. At the end of the day, the main important thing, how much I'm gonna get. Instead of 550, I'm gonna get 450. So be it. Gotta put the numbers and be rational, no emotional. So just put numbers on the paper, and if the numbers work, go for it. That's it. So a lot of people on the side waiting for what? I mean, what are you waiting for?
What's going on, everybody? Welcome to another episode of the Commercial Real Estate Blueprint Podcast. I'm really excited for today's episode. We have George Otel. He's a commercial real estate finance guy, so he can help with basically any kind of lending. And he's got some really interesting topics. We were talking just before the show started about all kinds of different solutions he's got, people who are looking to buy commercial real estate. So this will be a great one for somebody looking to get into the business, whether they're owner-occupant, whether they're investor, whatever it may be. It's going to be very insightful. So I'm really excited to have you on. Thanks so much for coming on, George.
Thanks for having me, guys. Always appreciate these entrepreneurs putting those together. It's I was reading the other day, basically millennials willing to study to find more information online than going to the school, and I agree. And because of the podcast you guys putting together, it's a lot of information. And the most exciting thing is like you actually guys doing it. You're not like reading or trying to reflect something. You're actually doing it, and it's you doing it, I do it, and we share the life real life experience, which is happening right now.
Exactly.
Yeah.
Thanks for having me.
Yeah, absolutely. We appreciate that compliment too. So for people, people who don't know who you are, just give us a brief background of who you are and how you got started.
Yeah. So my name is George Otel. I had the transportation company before 2012, 2015. Then I didn't like it. I liked the money, but I didn't like the whole thing, the whole concept. So I went into real estate. Started doing short sales. My first mentor, they were doing like flipping about 40 homes a year from buying them from the banks, and I like the paper side of the whole real estate thing. So that's how we evolved. Throughout the years, I was working with other partners. And 2018, I opened the U.S. business funding, and we started with the equipment financing, SBA loans, and now in the last 5 years, we're doing commercial real estate. So as of right now, we have a lot of options for commercial real estate. We have over 1,000 lending sources which we can help. So it's either SBA using owner-occupied. You want to do a refinancing, or you need a bridge if you have like a property or something you want to move quick. We can facilitate that. So yeah, we activate nationwide all type assets, and I'm happy to discuss different scenarios how you can take advantage, because it's a good market. It's just getting started, so be hot. So it's gonna be a hot market in the next 36 months. It's a good time to be on this, listening to this podcast.
Yeah, 100%. You hear people talking about, we've been hearing people say the debt wall, the maturity wall is coming for I've been hearing that for 3 years. Like it's coming next couple of months. It's coming next couple of months. So it's kind of hard to tell when it's actually going to come, but I'm sure you can speak to that better than us. Before we go further into that, I'm curious, where are you from originally?
I am from, I'm gonna give you a hint. I speak Romanian. My native is Romanian, but I'm not from Romania. And I speak Russian, and I'm not from Russia. So I'm from Moldova. It's between Romania and Ukraine. So I speak those languages. I've never been to Russia, but Romania. But I think in English. I've been here for almost 15 years, and I'm a citizen. And I think in English. I read over 150 books, and it's to make sure I destroy the different concepts, because in Eastern Europe it's a different culture. So I'm trying to mix all of them. Because basically you understand people, the more language you understand how they smile, how they cry in every language. So it's interesting. So also helps with the business. It's when you speak their own language, they kind of relate to you and give you a trust. So it's
that's awesome. You definitely get a different perspective, and probably a much better perspective than just somebody who knows one language or is stuck in one spot. The owner of our company, Nikita, he's from Russia, and he speaks Russian every once in a while. And we're always like, we can't tell what he's saying, but he's a genius. So that's awesome. So talking about that, you say it's interesting. It's going to be an interesting next 36 months. So tell us kind of why you think that, and tell us your perspective from the lending side of what's about to go down.
So basically, on Main Street, it's always the crowd what's talking about. So commercial real estate, it's not a crowd topic. Basically, it's talking just basically professionals and investors, and everybody's aware of the situation. Is like just not on TV all over. And the whole idea is like we dealing with those transaction already. It's just I mean, it's not in the press. It's not. It's I had some deals last year with some offices, and it was just about that moment was like we spoke with about 20 banks, and you talking, hey, can you do this file? Yeah, we submit it, and then a week later, oh, we don't do office anymore. So that was the starting trend of the office. So nobody does office now. We see this year office selling at 40-60% discount, and this I mean, it's happening. It's already happening.
Yeah.
But from the regarding the maturities, yeah, we see a lot of transaction. A lot. It's as I mentioned earlier, we able to move fast. I work directly with couple funds. It's like $2-3 billion funds, and they able to facilitate those transactions. Whoever needs, because the traditional funding options when it comes to bridge to those basically maturities, forget about that. Forget it, because I mean, it's a different environment. So private money is the only option that able to move fast and provide actually options and real options, because it's a lot of scenarios happens when they get in foreclosure or default because traditional funding doesn't work. So that's a tell. It doesn't work. That's why they got it into trouble. So yeah, if the good part, I have access to these people, and I see a lot of stuff that usually traditional funding takes you 4-6 months. They can get it done in 30-40 days. So that's kind of the idea. Or like if somebody needs funding for an opportunity, let's say for like auction or foreclosure, or you need to get out of almost to hitting the foreclosure, you have like a couple of weeks. We able to facilitate that. So we can do bridge loans 7 to 20 days business days, 1 mil to 100 mil. So we have different options, a lot of options available. So it's it's happening in my world. Is happening already. So it's
that's cool. I guess it's more like we're in North Carolina, and we're in like the Raleigh-Durham area, which is a very, very hot market. It's been a hot market for a long time, and volume has slowed down, but prices haven't really been affected that much. I mean, like a little bit, but not as much as everywhere else. So I feel like it's not as common for us to see it because we're almost in a pocket. We got Duke and all these other things going on. So I don't know. It's like when you're seeing these things like these distressed assets, are they in more tertiary markets or in these major markets or
nationwide? I have all over the country. Different situation, and it's because I work nationwide. It's I'm not focused on only one product, but yeah, nationwide. I mean, we have deals in Miami, we have in New Jersey, New York, and other sides, West Coast as well. So yeah, it's.
What is your opinion on the reason for like the stuff these things happening?
Well, a lot of stuff. It's the underwriting problem because it was like 2021 situation. People didn't consider. As I mentioned, some of my LinkedIn posts, higher for longer is gonna squeeze a lot of people. So the squeeze is really bad because that's hope is not part of the plan, so you gotta plan accordingly. And yeah, it's a bad underwriting. It's just doesn't work, and if it doesn't work, we're facing those situations. So that's kind of the situation. And then sometimes mismanage. We had a couple of situations when basically maturities, right? So they go to bank from one bank to another, and they getting declined. So as basically they see that you're getting declined, and if other banks decline you, the whole concept is like, if other banks decline you, I'm gonna decline you too. So I still don't understand how that works, but that's how in so-called traditional lending.
Yeah.
And yeah, I'm leaning towards the private funding, basically working with the funds, with the family offices, that they understand that this is opportunity as well. It's risk but opportunity. So it's transaction gonna happen, as I mentioned earlier with other podcasts. Transaction gonna happen. The question is, are you gonna be part of those transactions, or you just gonna say everything was bad?
Yeah 100%.
So are you seeing it more that it's interest rate issue doubling over like defaults. So like if you have an office building and suddenly it's, you have 2 or 3 tenants leave and now your occupancy is at like 40%. Are you seeing defaults like that more so, or is it more interest rates you think that's causing all these defaults?
It's a combination of mismanagement, the way they acquire, so basically every lender is looking at each file from this perspective, what we know about the sponsor, right? Who is the sponsor, what the experience they have. We're looking at the asset and the plan, how the plan is going to work. So it's a combination of mismanagement, sometimes misunderwriting, and then let's say they buy it right, but they didn't manage it right, so it gets to this point. And also one of the problems is being aware of the risk. So let's say if you need funding, you're gonna start as early as possible because you want to make sure you have enough time, because a lot of now is it's very tough. It's a lot of banks. They have a lot of things on the books that they're not performing. So the more things they're not performing, they have a lot of assets on the books. Let's say somebody's looking to buy some multifamily or whatever. So if they have those on the book and they see it's not performing, they're not gonna lend to that because they already have exposure to that. So it's this kind of situation. So also we are a brokerage company and we have access to that. So basically, when somebody's coming to us, I have like 5-6 scenarios lined up, and if this doesn't work, we move it to the next, and we know how to move fast. And instead of waiting like for 30 days, I can get the multiple options lined up in days. So it's this type of because you don't want to see, the problem is like people go to their local bank, and if anybody of listening right now, you go into your local bank. I love my local bank, but not in this type of environment. So one question to ask them: hey, how many transactions have you closed in the last 12 months or 24 months, like that? Because I mean, one thing is to say, yeah, I can do it, and I never done something. But another thing is to say, yeah, I can do it, and I've closed 5 of this last week or last month. So it's because you don't want to waste time in this type of situation. So
yeah. And what you're referring to is basically just like if you're trying to pick up a distressed asset, or you're potentially talking about maybe the owner trying to refinance out of it or something like that.
Yep.
I want to go back to a point you made just a second ago that, are you going to say everything's bad, or are you going to, get in there and buy stuff? And I think that's such a good point, because I'm actually, I'm not excited for interest rates to go down if they do. Everybody's saying they're supposed to come down, and like if you listen to the Trepwire and stuff, they're calling for, they think maybe it's September, they're going to come down and stuff like that. And it's like, yeah, that's going to be great for the brokerage world that we do as a day job, but the investing world, it's just going to make everything more competitive. A bunch of buyers are going to come back to the market, and we've been on kind of a buying spree in the last year, and the last 2 years have been just a good time to buy properties because you're able to actually negotiate and get deals and stuff like that.
Yeah. It's always this. I mentioned on other podcasts, is like you're never gonna buy something at discount with low rates, with low down payment. I mean, you gotta decide what's most important for you. You grab the property of the market, of the street, put it in your name, optimize it, and now it's actually a good time to buy because interests are high. And let's say 2 years later, you're gonna refi, cash out something, and that's gonna be your bonus. But you want to make sure it's cash flowing properly today, as of on those numbers. So that's how you get to the bonus section. So it's, if you have like a 10-year perspective on an asset, I mean, most likely it's gonna go higher. And considering all those money flowing back into United States and all the restructuring of the whole thing with the manufacturing, and it's industrial is hot, and it's the way to go. Industrials, those data centers and all the stuff, it's gonna be a nice I think 10-15 years of growth, unless something crazy happens.
This question that I had was, if we want to look for one of these distressed deals, what's the best place to go out and look for them? Because in my opinion, once it gets to the auction, you've kind of already missed your run, in my opinion. Not that you can't win in an auction, but how can you catch it before it goes into full foreclosure? I know CoStar has like a 30, 60, 90 days delinquent, but a lot of times I don't necessarily trust that data. So if we wanted to take advantage of one of these distressed deals, what would be your recommendation?
I have access to some of this. We use that for our internal use as well. So having a relationship with lenders, because they have that, and if you proven to be serious and solid, they may share some potential assets they're looking to sell or knowing someone that it's about to go foreclose and kind of try to buy from them and to do something like that. So it's all about having the relationship. But yeah, banks, they so as you guys mentioned earlier, not a lot of those default rates on the market. Yeah, because basically what happens, there's a pool of different banks, different funds. They partner together, so they exchange asset off market. So that's why it's not showing on the market, but those are happening all the time. I've seen a couple deals. It's like they never hit the market. They just just transacting. They just buy it, and that's but it's obviously requiring more money because you gotta partner with the fund or with someone that has access, number one, and has the ability to transact, because they not looking to usually goes, let's say, 30, 40, 50 million portfolio, and everybody participates, then you piece it out
Yeah.
accordingly. So it's because you're never gonna, I mean, it's, you can buy fully performing notes, but you want, when you want to buy distress, they're gonna throw you stuff that you may not like, but overall you like the portfolio. So that's how you weed it out.
Yeah, I'm curious.
I will have
We're-
some. I will have more probably in December, January. I will we working on putting together something like that. So I represent a group of private investors, and they're gonna have access to that, and I'll maybe be able to share something. I can get you on my list, and it's we can talk about that.
Yeah,
Yeah,
for
that'd
sure.
be awesome. That'd be awesome. So I'm curious. We can talk about deal structuring a little bit. So Jesse and I just closed on our 7th deal. Two we bought on our own. This is the 3rd one we bought on our own. The other 4 we bought with the company we work with. And we used an
Congrats.
interesting. Thank you, appreciate that.
Okay.
We used a method that I think other people can use. Definitely risky, but it works as long as you have a good deal. So we got seller financing at 75%, and then for the down payment we got a hard money loan in second position. So
Okay.
we just the tenant who was there had a very low rate. He'd been there for 30 years. We had to bring in the market. We told him, we don't like this part of the business, but we have a loan and we're planning to refinance, and we have to hit a certain debt service coverage ratio, obviously. So we had to have that conversation, did that, and he actually signed the lease yesterday. So we weren't expecting him to stay, but we're super excited about it. So we're going through a refinance with a bank that's local to that area, and we submitted a long list of documents. But I'm curious, if someone comes to you, they're going to buy their first deal, maybe it's their second deal, and you're a broker, what kind of documents does somebody need to have prepared to work with you?
Well, it all depends on the deal. So let's say if they want to buy for investment, it's one set of package. But usually, let's say you want to see last 3 year taxes, P&L, balance sheet, that schedule, all the REO schedule, and you take it from there. Then all the necessary, because basically we do internal underwriting. Then after pre-flight, we call it pre-flight. We understand who is most likely to do it, what lenders. Then we approach them and see, asking if they able to do. Then they sending us, because I don't want to send you a 40 line items to send me, and then another 60 before I get you an approval. So that's kind of the idea. But simple stuff. You take it easy, understand, and one step at a time. It's you basically, based on your taxes, P&L, balance sheet, that schedule, and personal financials, I'll be able to understand what we can do and what route we can take from there. So it's easy as that, because we try to simplify things rather than overcomplicate, because it's already overcomplicated with the SBA and even the regional banks. They ask a lot of things that probably not required, not needed for the initial conversations to have. So they make it overcomplicated. They throw you this list of docs, and you almost lose your conscience when you read through that. So
Yeah, no, 100%. And so, like we said, a lot of our audience is people who are wanting to transition from residential into commercial. So I'm curious, one of the fundamental differences in residential and commercial is if you're buying a residential property, typically they're looking at the borrowers, solely looking at the borrower's cash flow, versus in commercial, they'll look at the borrower's cash flow, but also the property cash flow. And then they call it, the global cash flow.
Yeah.
I'm curious, because I don't really know, what is there like a weighted percentage of, like, all right, the property's the property's ability to cash flow is like 80% of the equation, and the borrower's is like 20%, or how do they determine,
Yeah, every bank, they has their own kitchen, so everybody is different, because somebody's doing 75 LTV, somebody's doing 60 LTVs, depending how conservative they are and what they focus for. So basically every Monday I come to the desk and I have a lot of emails. Hey, we don't do this anymore. We do this anymore. We got a new program and stuff like that. So it's all adjusted to, let's say, to the region, what type of assets and so on.
Yeah.
It's not one thing. That's why we do our internal. So we have like our metrics, how we do things, and then we approach the banks and see how they do it. Because it's basically we go through times that it's no kind of like template how it works. You just go and find out. Because if somebody was doing something 3 weeks ago, they may not do it now. So the same program doesn't exist. So you go deal by deal, because it may be the same deal but different perspective on the borrowers. Let's say you have the same credit score but different experience, so it's another thing. Let's say if you don't have let's say somebody doesn't have enough experience but has more money than the one that has experience, so that's another thing to consider. So it's a lot of factors to consider before to it makes sense now.
Yeah, that makes sense. So like everybody's different basically. There's no
yeah. It's so my job is to make it simple for you guys and simple for them, because they think differently as you guys, investors, lenders, they think differently. So my role in the middle to make sure it's as simple as possible to get started, at least to get started, to have like an idea, guidelines, how to, and then you start to get it, because otherwise it's too complicated and like it's like a wall. It's like you're getting blocked. But now it like you address me a couple of questions, I kind of give you some simple things that change the whole picture, right? So it's how it works.
So question then, if I'm a new investor trying to buy my first deal, how can I position myself then? Because it sounds like it's a little bit arbitrage, a little bit gray area. What can I do to ease the bank's mind in us buying this property? Just say it's just me by myself. Like, what can I do myself to help to ease the bank's mind and give me a loan for this property?
Yeah. So basically, the way it's easier. So clients approach us, right? We do this pre-qualification, and then we approach the banks, because that's the only way to find out. I mean, it's changing. It's always changing, and so every other week there is new programs coming and new programs going. Because what was working 6 months ago, it doesn't work now. But the goal is to, let's say, to talk with as many lending sources as possible. But if possible, you want to work with a broker. If you know, you just do the work yourself. So you just, let's say, call 10 banks that are able to do it and ask them the same thing, and that's how you find out. Because it's too many things, it's too broad. So it's not like one answer to the same question. But the idea is to gather data. So what you can do to gather data, it's you call the banks and see what you need, how this works, and then after talking with 10-15 banks, you understand how it happens. Because when clients come to us, I present like 2-3 offers, so they understand, hey, you can go this way. Let's say it's you want lower payments, but the down payment is going to be higher, right? So the loan to value is going to be higher. So, or let's say they can give you a lower interest rate, but they want to take this property as collateral. So that's a combination. So that's because sometimes they don't want to address that, but me as a broker, I kind of go and ask them how we can structure, and most likely I have a relationship with them when we've done deals with them, and I understand how to restructure and how to position yourself, basically. So it all depends.
Yeah, that makes sense. How often have you seen a loan get approved that's less than 1.25 DSCR?
Not so many. It's they gotta keep it tight, they want to make sure it is what it is. It's if something goes bad, you gotta take the haircut. So
I'm just thinking, like, on existing it might not be 1.25, but if you get, like, let's say you have an agreement for a rent escalator, it's not now, but in 6 months that it will be above 1.25, or just like the property we just bought, the rent was never going to justify the purchase price. We took it down a way creative way, but someone is doing with traditional money, let's say they're going to go do a construction loan or something like that. Like, what's the best strategy for taking out a property that's with traditional money that's got like really low income for what you're purchasing it on?
You can use the bridge loans. You can use the bridge loan. It's a little bit pricey, but you put it in your name. You optimize it if you know you have a plan how to optimize it, and not just the for the multifamily just bump the rent, because that's not the only strategy. So you do some light rehab, or what are you gonna add to the property. So that's, let's say, number one question: how much is gonna cost you the premium on the money, and how long is gonna take you. So if you have like a 2-year goal, that's really good one, because you don't want to shoot like for 6 months refi, because nobody's gonna do it, and you're gonna put yourself in trouble. But let's say 2 year, right? So you have a good plan. Let's say you have to find out how much you're gonna pay for the money, how long it's gonna take you to do it, and if you do a good job, many people are gonna be lined up to give you the money. So that's when you actually start making money and get the juice out of the property. So it's if the numbers make sense, it's really creative. So that's the option with the bridge money to get it, because a lot of time not being able to get it it's frustrating. So it's
What's up, guys? It's Graham here. I wanted to tell you something honestly that just blew me away. So I just got back from the Commercial Academy live event in Cleveland, and wow, the room was packed with people who drove hours to learn from presenters, and people with combined several $1 billion in transactions. One guy even flew from Thailand, which is 2.5 days of travel just to be there. But here's what got me. We met regular people who went from buying single family rentals to owning entire shopping centers. J. Scott Shields' 7 moves to checkmate system isn't just a theory. We heard real case studies where this made people multiple millions of dollars. We watched attendees exchange contact information for deals happening in real time. Students there had closed their first deals within 6 months of learning this. Look, if you're tired of analyzing deals that never happen while others build wealth, listen up. Commercial Academy proves it only takes one deal, one time to change your life forever. Scott normally charges thousands of dollars for the training, but he's giving away his complimentary masterclass that shows you how to make $1 million on your next commercial deal. Text Scott Masterclass to 888-653-1199. That's Scott Masterclass to 888-653-1199. Don't be the person still thinking about it a year from now while everyone else is collecting rent checks. Get started today.
It's Jesse here. Let's be honest. Breaking into commercial real estate can be overwhelming, and trust me, I've been there. But what if there's a shortcut? Well, there is. It's called Fast Track from Commercial Academy. It's their brand new way to jumpstart your investing career. For one incredibly low monthly price, you can unlock Scott Shields' learning library. Decades of experience recorded by Scott himself and condensed into courses that you can binge watch tonight. You also get their exclusive deal analysis software that lets you run numbers on opportunities in minutes, not days. And that's a huge deal in commercial real estate. Here's what made me do a double take, though. For every Fast Track member that gets this, right, they get a free ticket to their next live event. That's a huge savings. It's also a chance for you to get into the room with other investors, learn directly from Scott, maybe even find your first deal right there in that room. If you've been waiting for the right time, honestly, this is it. The path is here. The tools are ready. And remember, it only takes one deal, one time, to change your life forever. Text Fast Track to 888-653-1199. Once again, that's Fast Track to 888-653-1199. Because I just had a lot of people come to me and be like, how are you guys buying vacant buildings? Or like, how are you getting funding for vacant buildings? For us, for example, one of them, we did a construction loan. The other one was seller financing. So that's the way to go. I mean, because traditional, forget about traditional. Everybody's doing traditional. It's and that's why it's a problem. It's crowded. It's the things are crowded. Yeah, seller financing is really good if you know how to put those together, how to build up the relationship with the seller, and it's really important to address that, because when we do, let's say, SBA, right? So we do a lot of owner-occupied, and if needed, I tell to the buyer, my client, hey, I mean, they gotta participate with some form of seller finance, because I mean, if you trust your deal, you have a good deal, then you shouldn't have any problems to do the seller finance, right? So if you trust your deal, because I had a couple of situations, they with the business acquisition, they agree to like 6 months transition to help, and they disappear. So it's with having a seller finance, it's helpful to keep them in the loop. And look, another thing is the
the benefits they get, because they not taxed at that level, that it's the gains. It's basically it's a loan. When they do the seller finance, it's a loan. So the tax, they getting this benefits of the, being taxed as a loan, rather than just the gains from the profit of the sale of the property.
Yeah.
Right.
Yeah, for sure. So would you say the same thing, with if it was purely vacant, you would say a bridge loan, or do you see banks right now lending on vacant buildings?
No. I mean, I have the situation they don't want to do it is because it's 80% and the market is declining, and the market overall, the vacancy on the market is declining 5%, and they freaking out. So but makes sense. So basically, they look at the market vacancy for the same asset, and they looking when they buy it, what was the occupancy when you buy it, and then what was the market. If the market is decreasing, then the risk is going higher. So they just they do defensive right now. But the private money, they do, yeah. If you have, like, say you guys have experience and you have some assets, and you can show, like, because basically, as I mentioned, they look at the sponsor who I'm dealing with, like, because they want to understand, because he's gonna private money is like me giving you my money. So that's basically, I want to make sure we understand each other. I understand your financial and overall situation, how you guys handle things, and that's how it happens. It's private, and it's happens fast for a reason, because it's people to people. It's not supervisor to go into committee, and then the whole hierarchy of doing things. So yeah, because, like, if you're able to buy things at discount, even though they're vacant, I mean, you buy it at the vacant price, because nobody's gonna pay, unless you're crazy, to pay a fully optimized property price for something that is vacant. So it's gotta make sense. So it's
so you, as the broker, are dealing with traditional lenders, but then also you talk about bridge lenders, which is technically like people call hard money technically, and then you got private money, which is like individuals. You're saying you also can broker deals to individual people, just like a doctor who's got a bunch of money, they want to lend on it.
So
or something like that.
No, private money is the big funds,
Okay.
family offices. Yeah, so family offices, you gotta have a 100 mil in cash to do a family office. So they have a CFO and they have underwriters. They allocate money to different areas. So, but the funds, let's say one of the funds that I work, they do a lot of creative stuff. They own real estate, commercial real estate. They done a lot of bridge loans. So they understand the market. They have their own underwriting. They have their own appraisal. So if something is fast, they just overnight the appraisal. They do everything in house, and it's moving fast, rather than waiting for someone to do an appraisal for 3 weeks. And you know how that works. And those things are moving fast. So
really, when you say moving fast, so really, like, if somebody's going on that route, typically it's because there's distress from the seller, and like it's like let's say Jesse and I came across an owner who's going into foreclosure or whatever it may be, and they got to get out from under that, and it's like, well, we need funding, but the traditional bank's not going to do it in 30 days or whatever. The private money lender will, so we can get it and then acquire the building.
So go ahead. Sorry.
I was just going to say, and then, reposition, stabilize, and refinance.
Yeah. So hard money, it's I call it in a fix and flip world. In a commercial, it's private funding, private lending. It's the same thing, but I like more private lending than hard money, because it seems like hard. And we don't like to overcomplicate things, because it is what it is, but it's more pleasant to private money. So because a lot of I've seen a lot of scenarios, it was a really successful deal. So for example, one of the funds that I work, they make sure that the bridge works, and they only willing to do the bridge if they have an exit for the bridge, and they have the long term already lined up, because again, they have access to this pool of money with other funds, and they're able to basically manufacture those loans to create those opportunities, because he's going to do the bridge loans once they have those long-term debt lined up. So it's like not, oh, I'm gonna give you the bridge loan and I'll see you later. No, it's not a good strategy. So when you go to someone like, hey, I want to buy this, want to do this, and then they give you the short-term option with the ability to refinance to help you to do all the structure, that's how you become successful. That's how you feel that somebody's this is a relationship. Yeah, because those people I know, those people, they build a relationship because like they basically give you their own money, and it's a relationship. It's not like just going to Wells Fargo and asking for a loan, and you never know what's going on or who you need to talk. So it's
yeah. I'm curious. So I don't actually know this. Somebody listening might have this thought because I kind of did. So if somebody's used to shopping traditional mortgages, they're going to different banks and stuff. They're dealing with a lender who is at that bank only, and they don't have the ability to shop around and find different lenders and different quotes and different options and stuff. So how do you get paid on something like that? Is it passed through to the buyer, or is it covered on the back end? Like if someone uses a broker, is it going to be more expensive for them to like origination costs, or how does that work?
Yeah, so basically we have a fee. We have our success fee. So once it's funded, you gotta pay the broker the success fee. So sometimes it's basically at the closing, it's the lender pays that fee or you pay, but basically it's coming from your side because we do the work for you. We find the funding source and we process all the things to make it happen. Because basically in today's environment, the most important thing to close the loan, because I'm trying to be real and honest with everyone and transparent. First of all, that I'm willing to take the deals that I'm gonna actually close because I don't want to waste my time, and I'm not trying to sell anyone to sell on a dream because I know what's the reality, and reality is it's ugly sometimes. And if I'm able to do it, I'll do it. If not, then I'll tell them right away. So it's that's the type of scenario. So yeah, the borrower is gonna pay us the fee. So it's there's like they do like the agreement, the engagement, and then we do the things, and we're getting paid that once the loan is funded. So
that's awesome.
Yeah.
And what's typical is it like a origination fee, like you're saying, basically? Is it based on the loan amount, or is it like a flat fee, or?
Yeah, it's based on the loan amount, 1 or 2%. So it all depends. Sometimes lower. It's all depends on a deal, how much we need to work, because we need to understand how much we're gonna work, how much people are we gonna dedicate. So I have my team of people. I have people doing it for 20 years, longer than me, and we gotta connect, and we gotta leave 800 other things that we're doing, and we gotta plug into this loan because this is it requires attention, and it's gotta move fast. So it's all depends.
Yeah, that makes sense.
How,
that's awesome. Yeah, and exactly what you're saying. It's like if you have a good deal, like how much are you willing to pay for a good deal? What's 2 points on a deal that will make you $1 million bucks or something?
That's not an expense. It's an investment. It's part of the thing.
Exactly.
Yeah.
At the end of the day, I'm a business owner. I'm an investor as well, and I'm looking at the things. Hey, I don't care about those people. The main important thing, how much I'm gonna get, how much is gonna be. So okay, instead of 550, I'm gonna get 450. So be it. But if I don't do this, I don't make this happen, it's gonna be zero, right? It's
yeah, you're incentivized as well.
Yeah. It's you gotta make gotta put the numbers and be rational, no emotional. So just put numbers on the paper, and if the numbers work, go for it. That's it. I mean, it just numbers. It just if the numbers work. I mean, okay. So let's say you're gonna pay a premium. Let's say so when you do the bridge, right? You pay us. For the brokers, you're paying fee, and you pay sometimes to the lenders. You're paying some fees to originate that, to make that happen. On top of the interest on the loan is a little bit higher. Let's say a couple of points higher than you pay for all the origination fee. But in the end, you're still gonna make that, as you mentioned. Like the meal or 800 work, so it's part of the transaction. Is all those fees, and it's a yes or no question. Does it make sense? Yeah. If no, then don't take it, and don't cry.
No, 100%. Like we got a hard money loan, and I was talking to somebody about it, and I was like, yeah, we got it, 12%. Like, wow, that's expensive.
Oh like, yeah, I mean,
but we bought the deal, and now we're about to
how much is making it?
And,
okay, so it's expensive, but how much it still makes you money, right?
Yeah, it's gonna at the end of the day, it'll make us several $100,000. So it's
So who cares? Who
Exactly.
cares? I mean,
Exactly.
The cost
throw
of
it
doing
out the
business.
window. Yeah. That means they have no idea how to run a business, how the math works. It's simple math.
Yeah.
It doesn't matter how much I pay. At the end of the day, how much I'm gonna get. So if I'm able to get some cash flow now, or to not to, let's say, those loans, the bridge loans that we have, like this, like they put in the reserve, they structure in a way so there's no payment for 12 or 24 months.
Yeah.
You got the deal, you optimize it, and you got a big day pay. So basically you cash it out, right? You refinance it. Basically you refinance this existing position, so you get some cash out and you have a fully optimized asset that is working.
Yeah. Well, let's pause
Yeah.
real quick. What you just said. So I'm not, I know what bridge loans are, but I've never done a transaction with one yet. So you just said that you can pause payments on like a bridge loan.
Oh yeah, you do. Yeah, you do interest only, or for example, for construction, no interest for 12 months or 24 months, or yeah. So the bridge loans are interest only. Yeah, it's you just pay interest only. So it's
Yeah, we
it's
say
a
well, so
game
we
changer.
say an interest only, but the construction is like you said that you don't pay any for the first 12 to 18 months.
Yeah, because they take some they do a reserve. It's a reserve loan, so they take from the reserve basically.
Like you take out what you want, kind of thing, like a line of
Yeah,
credit.
yeah.
Like the draw, you're
Yeah,
saying.
yeah,
Got it.
yeah,
Okay,
yeah.
Cool. Well, I'm curious. So like we got quoted the other day 6.99, I think it was, something like that. Is there, from a regular bank on a loan, how much more is someone going to pay interest rate wise for like a bridge loan or a private loan? Is it typically the same, or is it more?
Oh no. It's I mean, yeah, the bridge loans, it's 10 starting. I mean, you pay 12 for the hard money, so yeah, it's 12, 15.
That's what I figured, but
Yeah. It's I call so some. It all depends. What is the LTV? What type of assets? What is the scenario? How distressed it is, and all this that. So it's 10 to 15. That's the range. So it's. Well, it's not 20-35, but it's in this range, 10 to 15% kind of. Look, I want to be making sure that I don't, because not every deal is the same, but that's the range. So you pay 12. It's, well, if it makes sense, it doesn't matter how much you pay. Once you refi the deal, and you just go to the person that said that doesn't make sense and just present them, hey, here's the whole picture. So like it doesn't matter how much I paid because I just got 700,000.
yeah.
Talk to us about how it would work if you're trying to buy a property, you're trying to borrow, money to actually purchase a property, but then borrow money for the construction on top. How would you do that with a bridge loan?
Yeah, they basically it's all built in. Or basically there's two loans involved. So one for the property and one for like a line for the construction. So it's
Like a draw
done.
again?
Yeah. So basically, you get the property and then you get the loan, and it's how it works. But if you don't get the bridge, you don't get the loan. So
Obviously, yeah, that makes sense. I mean, so like my question is like,
yeah,
are
private
you,
money is.
could you do like 80% or even 75% and then pour like 30, 50 grand?
Yeah, we have some loans now. It's north of 10 mil that they do 95% LTC, loan to cost, 95%.
That's actually really great.
Yeah.
See, like that's a prime example. I'd pay 2 points at closing for a 90% LTV.
Yeah, 100%.
Yeah, so it's creative, man. It's a lot of different things. I mean, you want to lower. So the first question, what do you want to do? I mean, who you are, what do you want to do, and then they take you from there. Okay, you want, as I mentioned, you want lower payments, then you gotta do higher down payment. You don't care about the interest rate because you wanna as less possible down payment. So yeah. So for example, I do a lot of SBA owner finance. So any business owner that they looking to buy, they go to the local bank, and local bank they say, well, let's see. So it takes 30 days to tell them no, because basically they don't do that. So we use a lot of SBA. So SBA is 10% down payment, right? But SBA right now 7/8 at 10%. So if the company's the cash flow is really good, I can get you lower rate for SBA. If it's not really good, we do a projection. So projection based, it's 10.5 right now for SBA, and it's only 10% down payment, sometimes 15, but overall it's 10%. So the whole goal is to get the property off the street, put it in your name. 2 years
Yep.
later, we refinance, and here we go. That's how it works. The same thing here. It's you have a plan, and it takes a little bit of time, but that's what a success means.
Yeah.
It's you're not gonna get like a premium asset at discounted price with low down payment, and you're gonna be the only one to have access to that. It's
Yeah,
you got to do a lot of work, but that's the good part, because if you understand what you're doing, it's Graham said, it's you don't want you want more recession, so you want more recession, so you got to get the deals.
Get deals.
Yeah.
There you go. Lock them up, man. Lock them up.
Yeah,
Yeah.
I have clients. They saying, George, where is the recession? I don't see it, because he's like, I don't see it. So
Yeah, that's awesome. Question for you. I know you said earlier it depends. It's case by case, but and this could be the same answer. But I'm just wondering, how much weight do they put on a sponsor's previous experience? I'd imagine it's probably a good amount, right?
Yeah, yep. Because basically they, especially for the bridge loans, right? They want to make sure you understand what you're doing, and because that's how painful is gonna be the experience, because they're gonna be with you all this time with this bridge loan. They're gonna basically, you guys, it's gonna be in the same relationship. It's like he's giving you money, like you gotta perform, you gotta do what you have to do, and it's a process, because it's their own money, it's private money, and it's important. The experience obviously is important, and another thing, how you cooperate with them during this process, the loan, as like you're stubborn, or you're trying to cooperate with them because obviously they have more experience, and like what is the middle ground, like you're willing to understand things. Let's say I have people that they've been looking for financing, they almost hit the wall, like really bad, really bad. Like we're talking about hundreds of units, and I can't put too much details, but it's really bad. So I have options to, let's say they were looking for finance for 5 months. I was able to facilitate something in just 5 to 10 days to find the like approval. And actually, basically, when I find an approval, it means like you really approved and I'm ready to move forward. It's not like I don't have to go to the committee and accept that. So it takes this fast. It's, let's say, 3 to 7 business days to get you approved and to move forward. And if we got those situation, there is an engagement fee, because how serious you are. And it's like, yeah, I want the loan, but I don't want to pay the engagement fee with the lender, because it's they want to see if you're serious. You gotta put the engagement fee. That's how
Put
it
your money
works.
where your
And
mouth is.
you do like 5 grand or 10 grand or whatever the lenders. So I mean, you want me to give you $12 million or $15 million, and you're not willing to do the first step, because basically, for people that don't understand how this works, you give the lender those, let's say, $5,000 or $7,000. He's gonna use this money for his lawyer to start the process. That's how it works. He doesn't. I mean, his business to lend you $12 million, not to take $5,000 from you, because it's just wasting his time basically at this point, because they control billions of dollars, and it's not the point here. But you know how that works.
Yeah, for sure. You mentioned so we were making an offer on a deal. We made an offer on it, another industrial one, and the person who's got it listed is a residential broker, and they said, "Can you please send me your pre-approval letter?" And I was like,
yeah, I can do that for you guys.
You keep saying approval, so I was like, oh, that's cool, because traditional lending, they don't have pre-approval. They'll say something they'll send a letter that says like, we will do this loan if it appraises and we pass underwriting.
I can do the same.
Do all this stuff. It's like, I was just gonna say, that doesn't really hold a lot of weight. So you keep mentioning approval, so you guys can do something like that.
Similar. So I do pre-approval for SBA. So basically for SBA, we do a lot of business acquisition, owner occupied commercial real estate. And when I say pre-approval, basically the 3-year taxes, P&L, balance sheet, debt schedule, PFS. And 3 to 5 business days, I actually have like the approval from the bank, basically. So you know how much you qualify for and what to expect. And let's say you have the property. It's like, George, here's the property. And basically same day, the bank is going to give you the term sheet. So you don't waste days or weeks to get the term sheet. So that's the idea with the pre-approval. But with this one, I mean, it's the problem with the realtor, because it's they live in a different world, and it's
Yeah.
it's it's a pre-approval. The pre-approval doesn't mean anything, to be honest. But if somebody's
Yeah.
looking, we can. I have sources that they can give you a pre-approval. They gotta basically you provide some documents and they
Yeah.
give you the pre-approval. It's not a big deal. Yeah, it's because I tell people, look, realtor is a realtor, and I have nothing against the realtor, but it's
Not commercial.
commercial real estate is a different animal, and
Yeah.
it's got to be done properly because it's you don't deal with that. It's look, at the
100%.
end of the day, this pre-approval with they waiting from the bank, and okay, so they have the pre-approval, and how many deals they got declined in the last minute with the pre-approvals, so it's
Yeah, 100%.
We've been denied
100%.
with a pre-approval, right, Graham?
Yeah, on a residential deal after we were told there was no issue at all. But
Oh,
it was actually
yeah.
pretty cool. We
Selling the dream. It's
yeah,
Yeah.
100%. It was
Well-
actually it was awesome because we with the first deal me and Jesse bought together was a duplex, residential property. It was a duplex, and one across the street we found. We put it under contract, and we were ready to buy it, and we were going to overpay for it because we owned the one across the street, and we are all excited and just starting out. And then for whatever reason, we think it was definitely a God thing.
Yeah.
We got after the lender said, you're good. There'll be no issues, yada, yada. We couldn't figure out a way to get it done. And so we ended up saying, you know what, we'll just drop it.
Yeah.
Because just at the same time, a $250,000, 6,000 square foot warehouse came across my desk, which was an industrial building. I said, well, why don't we just drop this duplex and just go all in on commercial? And that was the first deal we bought. And that started the journey of us getting all these other buildings. So I'm so glad that we got declined.
Yeah, yep. I to be honest, I've done some real estate, some residential, but I love commercial. It's a different animal. It's harder, but look. It's, let's say, for multifamily, like you have like duplex, fourplex. It's like usually like 2 year average rent. For you do an industrial is like 5, 10, 15 years, and it's triple net, and it's if you structure it properly, it's really good.
100%.
And it's just it's a little bit more scary because if you don't have experience, it looks more scary. But if you know how
Yeah.
to do it, that's the only thing you want to do. It's just put
It's
businesses.
really easier than residential,
Yeah.
honestly. If
Yeah.
you know about it and you educate
Yeah.
yourself, it's a lot easier.
And I know a lot of people. They transition, and it actually makes sense. I've seen a lot of deals that I like, and if you want to do good money, really serious money, the commercial is the only way. Even multifamily is a different animal than just single families but
Yeah.
I love industrial, and I'm bullish on industrial for the at least next 10 years. It's just only
Yeah. Us
going
too.
to grow and
100%.
be good.
Yeah. I can't think of any other questions. Jess, do you have any last questions?
No, I don't think so. I think we've covered it, man. There's a lot to
Yeah.
cover, but I think we've covered a lot of it.
We've covered a lot. So if people want to reach out to you for funding solutions and they're looking to get their first deal or maybe their 100th deal or whatever, maybe what's the best place for them to do it?
Yeah, LinkedIn, George Otel. And then our website is usbizfunding.net or usbusinessfunding.net, or they can send me a text message at 414-475-7757 saying Commercial Real Estate Podcast or Jesse Graham or whatever, mentioning the podcast.
Yeah.
Also, business owners that they look into I call it like the wealth building strategy. So if you leasing the building, and a way to build up wealth is to actually buy the building. So if you're leasing the building for at least 12 months and your landlord is willing to sell with a 12 months history, I can do 100% financing through government loan, through an SBA, or to buy any other businesses buildings, basically business property, we can do with 10%. So basically I have situation that it's real simple. Basically, a lot of people don't get it because once you pay the rent, the landlord takes the rent and pays the mortgage and has some for vacation or the pension plan, because that's how it works. And I encourage everyone, because let's say you as a landlord, you have a property you want to sell, and it will be nice for you to sell it to your to your tenant if it's in your plan to sell the property and somebody is willing to buy it at the right price and everything comes along. It's really good. It's a win-win, right?
It is.
Yeah, 100%.
So yeah,
100%.
LinkedIn, George Otel, usbusinessfinding.net, usbusinessfinding.net. Available. Send me a DM and we can discuss. It's a lot of times after 10, 15 minutes conversation, we have those available. It's free. We don't charge for that. People have a different perspective, because we able to help them. We have over 1,000 lending sources, starting with the conventional SBA, private, and bridge, family office, a lot of stuff, a lot of creative stuff. So the things are just starting to get creative, amazing, and awesome in commercial real estate. So now it's a good time to listen to this podcast and then listen it again and then put a plan of action together. Thanks for having me,
100%.
guys.
Yeah,
Yeah.
100%. It's like, I couldn't agree more. Now's the best time to be buying stuff. If you're
Yep.
listening, get out there and find some deals because, whenever they do drop the interest rates, it's going to be very hard to find good deals again, I think. So,
Yep, yep,
yeah.
yep. It's so a lot of people on the side waiting for what? I mean, what are you waiting for? As I mentioned, like
Yeah.
once the interest gonna drop, it's gonna be instead of 5 buyers, gonna be 25 buyers. So and
100%.
they're gonna overpay for stuff that emotionally it's gonna be the new gold rush.
100%. Awesome. Well, thank you so much, George. Hope you guys enjoyed this episode, and we will see you in the next one. Thanks, guys.
Yep.